Hello everybody, welcome back to a chart nerd technical analysis video. Today we will be discussing the likes of VELO. Now it's been roughly 2 weeks since I've released any content. I have had some issues behind closed doors that I've needed to address, but those are now under control and I should be back with regular content. So in today's video, we are specifically going to be analyzing the macro outlook for VELO and why I think we should ignore the noise during this sort of sideways period that's been going on. I mean, since the 2 weeks I've not been covering, not much has happened. So I can understand it gets frustrating and boring. And today we're going to focus on the bigger picture and when we're in doubt, why we should zoom out. Nothing that I say is financial advice. Let's dive in. So I wanted to start by coming over to my X profile and scanning over a few posts for VELO's macro time frame. And the first one here is an Adam and Eve 2025 update. Now, if you've not been following along, there's been an Adam and Eve breakout pattern that we've been monitoring for nearly, I would say, over a year now, in fact, and we are still on the verge of building towards this target, which sits at Adam and Eve target here at 10 to 11 cents. Now, I've said here in the post that we've had a 10-month consolidation period above the Adam and Eve support, which is great. The previous resistance that's now support, but the monthly 20 EMA has been hit and is now key resistance to break at 0.032. Once the 20 EMA and the 0.038 high is broken, I expect 10 to 11 cents to arrive within weeks. So scanning over this post here very quickly, you can see that we've got that Adam and Eve pattern here where you've got that Adam, which is the V-shaped recovery, and then you've got the Eve, which is this rounded bottom. Now this creates the Adam and Eve reversal pattern, and what happened was in 2024 we got the breakout which put us up to this May high in 2024 of 0.030. At this point we then corrected back down for support on the Adam and Eve resistance. So we turned this previous resistance into support, creating a flipped SR. Now from this point, we then rallied up in an ABC up to the monthly 20 EMA and very close to the 0.50 resistance on the way back to the all-time high. So the resistance is 0.043 at the 0.5. We just fell shy in the last 2 months and ran up to the 20 EMA, which at the time I think was 0.035. It has creeped down now as this is a moving average and now sits at 0.032. So within doing so, what VELO has done is we formed the Adam and Eve, we've broken out in 2024, and then for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 to 11 months, we've been consolidating above the Adam and Eve resistance that is now support, but then we've also been consolidating under the monthly 20 EMA resistance. So we're literally compressed between an EMA and a key level of support right now and have been for the last 10 months. Now, within that 10 months, we have had the retest of this monthly 20 EMA, which is the first of its kind. In December 2024 was the first time VELO actually tapped this moving average since its decline in 2020. So it's been a good few years, and I think that it's quite healthy to see resistance and not break through this on the first point of contact. If we was just to have melted up, I think it would have just caused for concern in the very short term. You know, if you just bolt up here, again, a lot of projects will just crash back down to where they came from. So I think right now we've got this steady growth that's going on right now, and we're caught, yes, in a long consolidation period, and I understand it gets frustrating, but this EMA is normal resistance to meet, and I think we're still holding this key structural level of support. Now, within this Adam and Eve pattern that we're discussing, the target, the breakout target, is to 10 cents, which is the 0.618 here. So the Adam and Eve target is at 10 to 11 cents. Now, I think that target is also this macro wave 3. So we've got waves within waves here trying to get to this macro wave 3 10 cent. So wave 1 was this V-shaped recovery for the Adam and Eve, and wave 2 was the Eve formation of the round bottom, and then you've got wave 3 right now, which is the breakout and meeting that Adam and Eve target at 10 cents. I think that would complete the wave 3 before a pullback towards 0.50 resistance, which we just ran shy of last month, potentially to 0.04 in Q3, and then in Q4 getting the final impulsive wave, which, by the way, guys, could be as large as wave 1 or as large as wave 3. I've got it tied up to wave 1 because it suits very closely to the 38 cents at the 786. But I think this could push on and get really euphoric if certain conditions are met at the time. So the wave count is wave 1, wave 2 within the Adam and Eve. Wave 3 is the Adam and Eve breakout target, which we're trying to get to now once we break the monthly 20 EMA. Wave 4 potentially pulling back to the 050 in Q3, and then in Q4 pushing for this extensive target to 38 cents and potentially beyond if we're lucky. So that's the sort of breakdown here. You can see 10 months of consolidation range above the Adam and Eve support whilst under the monthly 20 EMA resistance. We are coiling up and getting compression here between a key EMA and a key level of support. So that's that post there. Now, secondly, I wanted to come over to this 3 rising valleys pattern. Now, this ties up very, very closely to the target of the Adam and Eve structure. So the way that you could look at this as well is we had this high in May 2024 and then pulled back for, I think it was about an 89% correction and created this valley. Now from this valley, we created a double bottom, which led us into this peak, which is the first peak and the first local high. And at that peak, we had an A, B, C to create valley 2. So you'll notice that the highs and the lows are getting higher over time, right? And then from valley 2, this is what led to the breakout to our 0.038 high and created a second peak. Now from the second peak, we've had another A, B, C correction back to this 0.013 low around 2 weeks ago and have created what looks to be this third valley. Now, if I managed to stick on a bars pattern here, now this replica pattern or this bars pattern is a replica of this move here. So overlaying it onto the charts here, it gives a rough estimate towards 10 to 11 cents, which ties up with our Adam and Eve structure. However, I think that this 3 valleys pattern does have a higher target, as the way to officially measure the breakout target is going from the lower valley 1 up to the second peak high and then using that to represent the breakout. But I think what we might see is if this is 0.013 is the low and we have been holding above a key level of support at 0.017 for the last few weeks in regards to candle closes, do apologize, then we could be looking for this breakout. And if we do start pushing up quite impulsively, we could see 0.033, which are these candle close highs and this level of resistance, act as a level of support in the near future on the way to the breakout towards 11 cents. So I think this is a very important pattern to monitor here. Shout out to MI6 Lethal Tool. He was the one that pointed it out to me. But this is a very, very bullish structural pattern and ties up very closely to our Adam and Eve breakout target. Now, moving on to another post here, we have the VELO monthly 10 and 20 EMA bull cross. I updated this, I believe, this morning, and you'll see that we've got this 10 EMA that we've been creeping up and holding ever since the breakout in 2024. We've been holding the 10 EMA for 1, 2, 3, 4, 5, 6, 7, 8, 9 months. We've been above this key EMA. So it is a key level of support and currently sits at 0.017. In the meantime, we also have this 20 EMA that we've spoke about in the video that's acting as a key level of resistance. So we're getting price compression between the monthly 10 and 20 EMA. You can see for the last 3 months, we've come up to the 20 EMA. We came back towards the 10. We pushed up to the 20 again. Now we're back towards the 10. Don't get me wrong, these wicks I think are relatively common. As you can see in prior corrections, we had really large wicks to the downside here, but the closes genuinely tended to remain above the 10 EMA. So if we can close February out above the 10 EMA, which may be a little bit different from now, but currently sits at 0.017, the low 17s. If we can close out above that in February and start getting the push into March, attacking this 20 EMA for a 3rd month period, we could see the breakout into March. So we're getting this price compression, and this is something we really need to keep an eye on as well, is the 10 and 20 EMA on the monthly time frame. Now, if I come over to another post, and this is just explaining about the 55 and 20 EMA bull cross, so the weekly bull cross, the first of its kind. This occurred for VELO back in November 2024, okay? And we formed this bullish cross, and I was speaking on content back then saying this is an ultimately bullish signal and ascending that it's gonna send. And what we saw was the price go from 0.013 on this bullish cross formation, and this is where we got the rally up to that 0.017 0.38, sorry. So we saw I think it was about 175% increase after the formation of this bullish cross. Fantastic signs. Now all that's happened is we formed a B, C correction, an expanded flat where you've got the A wave, the B wave took out the previous A wave high, but the initial candle closes were lower than the previous. So we had lower highs in candle closes, which indicated an A, B, C correction. And we've had the A, B, C correction, which has brought us back down to the EMAs, right? So we had the 20 EMA retest. We came back down to the 55 in January, as you can see here, January 2025, 50-week EMA retest. So we broke above the EMAs, we held them as support, and now we've retested both the 20, which we're below at the moment, but we're above the 55. So we've come back to these EMAs, which is what you want to see, guys. You want to see a nice impulsive breakout, have a correction back to the EMAs, and look for continuation of the trend, okay? Because this is just a correction within an uptrend. This doesn't look like a dramatic crash or bear market. This looks like a correction from an uptrend and is completely healthy. Okay, we'll study the corrections a little bit more and its prior corrections over the last sort of year or so very shortly. But this looks like it's an ABC complete correction, and we're just sort of coiling between the weekly 20 and 55 EMAs here, waiting for a decision. This isn't to say that we potentially could pull back to a higher low still and potentially fill this wick in before getting the breakout, which is also something I'm going to discuss shortly. But right now, closing above this 55 multiple times is a good sign. We just need to reclaim this weekly 20 EMA at 0.020. So there's a few key EMAs to keep in mind, guys. The weekly 20 is a key level of resistance, 0.020, and the monthly 20 EMA sits at 0.032. They are the two key EMAs we need to reclaim in order to see price continuation to the upside. Now, coming over to this chart here. Now, this is something else that ties up with 38 cents. Oh no, we've got 43 cents here on the, did I quote this as 38 cents? I did. Okay, fair enough. I must be yeah, I was looking at the MEXC chart. I normally study the KuCoin chart, but the MEXC chart 0786 sits at 43 cents. And you can see that we've been sort of caught up in this rising channel. Now, a lot of people would look at this, sorry, it's not a rising channel. A lot of people would look at this as a rising channel, but I don't think it is. I think this is going to catch people out, and this sort of dip we're going through right now, where we're building these higher lows, is where a lot of people think that it's over. And what's going to happen is we've been coiling up in this channel, and we're just going to break down and eventually crash to zero. Okay, a lot of people think that, but I think this is a bear trap, and right now people are going to get wiped out. There's going to be a lot of exit liquidity, and things are going to start getting parabolic very soon. So I think that this is a continuation pattern, and again, it's that monthly 20 EMA that just needs to be reclaimed. And I think the next leg, which was our wave 3 target of the first post, if you remember, analyzing this wave 3 move, the next leg would push us up to 10 to 11 cents before a retracement to 0.04 on the 050, flipping that into support, and then getting that fifth wave up to the 0786 between 38 and 43 cents, leading into Q4's end. So you can see it does say 2026 here, guys, but if I expand this, it would show you that this is around October, November of 2025 that it ties up. Now, they were all macro bullish charts from now. This is 0.013 low being the low, and I do think 0.013 will maintain as support, but this is also a play that could potentially happen. So if we continue to run into the weekly 20 EMA at 0.020, I think VELO could potentially come back for a higher candle, a lower candle close low below 0.0, I think this is 17 here. So if we come back and close any lower than 0.017, just look for this ascending support. You can see that it's been holding for a very long time, since July sort of 2024, and we've been creeping up it over a long period of time. We have had the wick down to it and below it, but these do happen. Okay, and it happened in the past in, I think it was around September, October of 2024. So, you know, you do get these wicks that tend to deviate outside of the channel, but the buyers come back in, and right now they've come in quite heavy, but we're meeting this 20 as resistance. So if we do meet it as resistance and fail to break above 0.02 this week, I think it could give us insight that next week we may be pulling back a little bit more to create a lower candle close low and maybe in an RSI create a hidden bullish divergence here. And if that does play out, you've got this 1, 2, 3, and right now we're just in a wave 4 into resistance at 0.02 before getting the wave 5, which creates a final 5th wave, a lower candle close low, and then going for the impulsive breakout, which takes us out of this ascending resistance. And this could lead us into the end of February, i.e. next week, the last week, where we get the final 5th wave drawback and then go for the breakout, form some sort of inverse head and shoulders, some bottom structure here after the ABC, and then go for the impulsive move, which brings us back up to this ascending resistance near the high 0.038. So that's all the charts I wanted to look out for. Again, several bullish charts we've covered, and this one I think is the utmost sort of bearish it could get if you want to class it as bearish, but you wouldn't be losing this low, and this wick would just potentially get in some sort of filament to create some bullish divergences, on indicators before getting the next breakout and leg up. So that's a lot of the coverage today. Now going back to VELO on the monthly, again we've just got the 20 EMA, which is a key level of resistance for us right now, and we do have this level of support on these wicks right here as well that we can keep an eye on. So just monitoring this ascending level of support here. And what I was actually trying to focus on was just going back to the corrections and why, this might seem quite harsh, right? Going from 0.038 back down to 0.013 in the space of 6 weeks, especially if we've got new investors or new people in the community that are buying at 0.038 highs on all the hype. This was a fantastic time, but we have ran into a key level of resistance, and nonetheless there would have been people buying these tops. Now I can understand that the negative sort of sentiment and community awareness around that, because we have seen this large crash and it feels like it's just going down forever, but really and truly we have lost to no macro support, okay, because you've got higher lows that are building up over time here, just the higher lows month after month after month, and we've got these higher highs, okay, in price action. Again, we've just run into a key level of resistance on the EMA, which is why it's taking a bit of time to actually get out of here. But generally speaking, we're just working our way up the stairs in this lovely bullish structure, and once this 20 EMA is cleared, I think that's the go sign for VELO to push up to higher targets. So really and truly, these corrections aren't uncommon and haven't been in the last couple of years. I mean, imagine being in December of 2022, seeing this high come all the way up. I think this was a really quite a large move, and then it crashing down 80%. It would have felt like the end of the world, but what followed was a monstrous move that took out this high and the previous high after that as well. So, this correction here was roughly around, that was about an 89% correction, and it would have felt like absolute doom, but this would have provided ripe opportunity, because a move that followed that up to the next leg was roughly around 1,615%, a 16x. And then again after that, the next 3 months after, right, which is again quite common, it had a 76% correction. And everyone would have felt like it was the end of the world at that point. But no, what happened? It ended up rallying and putting in a new local high and increasing by another 456%, another 4x. So all in all, yes, from the bottom we come up and we have these impulsive moves, and the corrections are quite steep. But after the corrections, the impulsive moves continue to put in new local highs. And this is why I say we're gradually climbing up the stairs. So the prior two macro corrections, one was 75%, which took 3 months to play out, and the prior was 88, which took 1, 2, 3, 4, 5, 6 months to play out. Okay, so we've gone from 6 months to 3 months, divided by 2. Now we're going from 3 months into what looks to be 2 months. And this correction here, again, this is quite speculative because it's just based off time, really. This correction here has been going on for 2 months and is a 66% correction. So you'll see that the corrections are getting less and less over time before the next impulsive move begins. So you've gone from 88 to 75 to 66. Okay, so I am in favor that this low is in, and this is just to shake people out, this confusion right now, before the real fun begins and pushes us up to those higher targets. We could also, in some sort of sense, if we use our Adam and Eve support here, you could sort of say we have formed this triangle, which we've actually back tested for a level of support. And you can see that we've got this symmetrical triangle here, which was coiling up in for so many months. We've broken out, ran into the 20, and have now back tested the triangle resistance for support as well, which is why we're seeing the buyers come in here and try to push this candle back up. But if we do get the close above 0.013 this month, I think it's an extremely bullish signal for March, and we'll have to monitor that moving forward. But I hope you've enjoyed the content today, guys. From Chart Nerd TA, take care. Peace out.